Hello folks, welcome back to a new episode. This is RALLYTOP Investing 3.0 SMC Masterclass. In today's episode, I want to teach you a very powerful way to trade the market and get huge moves during a particular week. This is very important because a lot of traders do not know that we have three phases of the market. Phase number one is the consolidation, which often happens during the Asian session. And then you have the manipulation phase, and then the expansion phase. A lot of traders misdirect their focus to the manipulation phase, whereas what they should be focusing on is the expansion phase. The second thing is this: if you can identify the high or low of the week, then you will be able to trade the expansion phase successfully. Traders who trade the expansion phase are the traders who make money in the market. Look at this pattern. First of all, I've done a couple of videos using this pattern. So this is a very powerful pattern. This one candle that you are seeing here is a very powerful candle pattern. It tells you deep information about the market. This is known as shooting star candle pattern. Now, you want to see this on the weekly time frame first of all. Once you find this pattern on the weekly time frame, please take note of how this pattern forms. You don't want to see the body of this candle close about 60 to 70% of this total candle range. You want to see it as a very small body like this with a large wick. Okay? And you don't want to see the tail to come longer than necessary. That's the first thing. Number two, this candle wick must take out the high or low of the previous candle. Number three, this candle must close inside of this previous candle's total range. That is, it must be contained within the range high and low of this previous candle. Now, once you find this candle on the weekly time frame, then you know you have high probability trade scenario at hand. When should you look for this pattern on the weekly time frame? You need to see this candle pattern happen either on Monday or Tuesday. Out of the 2 days, sometimes it happens on Monday, sometimes on Tuesday. So meaning that you do not need to trade on Monday or Tuesday if you actually want to catch the big move of the market during the week. You can actually take one trade in the week and make a huge kill of the market. In this business, it is often said that less is more. Okay? Professional traders wait to capitalize on the expansion phase of the market during the week so that they can make a huge kill. So you want to see this pattern happen either on Monday or Tuesday. Once it happens on Monday or Tuesday, you will have a fair idea that the high or low of the day has probably been formed, because that is the crux of the matter. If you can identify the high or low of the week, then you will make a huge kill of the market the remaining days of the week, because price will be expanding in the opposite direction. So that is what you want to find on the weekly time frame. Now, once you find this pattern on the weekly time frame, you will switch over to your 15 minutes time frame. You are not going to be taking your trade on the weekly time frame. You will take your trade on the 15M time frame. When we get to that 15M time frame, I'm going to show you what you should be looking for, what you should wait for before you can take your trade on the 15 minutes time frame. Now, I'm going to take you to the live chart and show you one or two examples so that you can know how to approach the weekly time frame. But before then, If you are new to our channel, please consider subscribing right away and turn on the notification so that anytime we upload a new video like this, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately, because you have lots of valuable content that you can gain from on our free Telegram channel. I'm going to leave the link in the description. And if you want to actually upscale your trading in 2025, we are offering an opportunity for you to come and learn how to trade the market professionally and become consistently profitable. You don't want to enter or step into 2025 struggling with the market. I'm sure that is not what you would like to do. So we are giving out huge discounts. We want you to come and learn the strategy that will help you in 2025 to remain consistently profitable in the market. So if that interests you, you can check the description box. I'm going to leave the link also there. You can reach out to us. With that being said, let me take you to the live chat and show you one or two examples. Okay, this is Euro USD weekly time frame. First off, before we start using the strategy, we need to identify the bias of the market. Are we bullish or bearish? And the only way you can do that is to map out the most current structures in the market. And as you can see, we have a low here. This is a low. Why is this a valid low? It is a valid low because it has taken out inducement. Without inducement, don't buy or sell. So inducement is taken out there. Let me make it bigger for you to see. Look at this now. So you can see it took it out with this candle wick. So that is a valid inducement taken out there. And now this low is confirmed as a valid low. And then look at what happened here. Price took out that low. Price sponsored the move back down to take out this low, which is your break of structure. Even though it took it out initially with a candle wick, but this next candle closed below this candle wick, okay, causing this break of structure to be valid. So now this is your high. So if in future price comes up to this high to take it out and closes above it, that will become a change of character, because we're already in a bearish trend, as you can see. Okay, so this will become our change of character. Now the next low is right here. For this low to be confirmed, it needs inducement. And so where is the inducement here? Well, the inducement is right here. So after taking out that inducement, this low is now confirmed. So if in future price comes to take out this low and closes below it, that will become a break of structure. So this will become a break of structure. So this is your low and this is your high. Okay, this is your high. So price is in between this high and this low. Now all these are internal structures. Now for you to be able to play these internal structures, you need to look at it. What's happening here? After taking out inducement, where is your area of interest? Well, there are only two areas of interest that work within your trading range, as you know. Now, after taking out this inducement, this order flow is already mitigated, because the first thing you need to look out for is the unmitigated order flow. But here is already mitigated by this inducement. And the next one is here and it's also mitigated, okay, by this candle here. Okay, so now another one that you have is this one. It's already mitigated by this. Another one is this, which is also mitigated by this. So everything, all the other flows here have been mitigated. The only zone that you have that is unmitigated is this extreme OB, this candle that took out this candles, this previous candle's high, it took it out. But look at this candle, would have been your OB, but there is no fair value gap. If you are using the OB, you need a fair value gap, and therefore we can transfer our OB from this candle to the next one in order to have a fair value gap, and therefore this will become our OB. Okay, so that becomes our OB in the market. In future, if price taps into it, we want to go short from there. So as you can see, price came into that OB and tapped into it before going short. Let me change the color of this to make it a bit brighter for you to see. Okay, so as you can see, price comes into it and taps into it and is going back down now. Why? Because we are bearish. So as price came back down, now you need chalk in this instance. So where is your chalk here? Well, your chalk is right here. And as you can see, price took out that chalk. Now you need inducement after this chalk for you to be able to enter the market. And so price printed this low. For this low to be confirmed, it needs inducement. And so where is the inducement in the market? Here is your inducement right here. And as you can see, price took out that inducement. After taking out that inducement, what do you have? Look at this. When price took out this inducement, it's with a candle wick, and this candle wick also wicked above this candle, and this candle also wick. So everything is wick, 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 wick. Can you see that? And therefore you now have this one here, this one. Okay, you have this candle. Take a look at the pattern of this candle. Compare it to what I showed to you before. Compare it to this pattern. Does it not look the same? Look at it. And this one, look at it. Can you see that? So that's the pattern you want to see. Now, that's the first thing. Number two, when did this candle print? You need to confirm when the candle printed. It has to be either on Monday or Tuesday. And as you can see, this is a Tuesday candle. Did it meet the conditions I told you about? Yes. Look at the high of the previous candle is taken out by this candle wick, and it closed inside of this previous candle's range. Okay, so that is what you need on the weekly time frame. Now, once you have identified this on the weekly time frame, you want to get down to your lower time frame, which is the 15M in this instance, to see whether you can take a confirmation trade to ride the expansion downward, because this is a clear signal that price is about to begin to expand downward. Okay, now where will be your target if price is expanding downward? It is this previous candle's low here that you will target. Okay, so now we can go down to the 15M and then look for a trade entry. So this is the 15M now. Let's see what happens. We want to go short. I hope you understand that. So you have this low here. For this low to be confirmed as a valid low, you need inducement. This is inducement. Where is your area of interest? Well, as you can see, this other flow here is already mitigated. Okay, this one is already mitigated, so we cannot use this one. Now the only one we can use here is this, but this one is not a valid pullback here. Look at this. These candles, this massive black candle, high and low, are protected. So all of these, they are inside bars. So there's no way you can use this as your OB. So the only one we can talk about that we can use here is if price takes out this inducement with a candle wick and gives us any reason to go short, we can go short from there. So we continue to advance price. Okay, so I think it has taken out this low. No, it has not taken out that low. So our inducement is still valid where it is. Okay, now it has taken out this low here. So we have a new low in place. For this new low to be confirmed, it needs inducement. So our inducement can be transferred from here to this zone. So we are waiting for price to come and take out this inducement. Still, we do not have any area of interest to enter, but our area of interest, if price takes it out and gives us any reason to go short, we go short from there. So we continue. Okay, we have a new low now in place, and therefore we need inducement for that low to be confirmed. And where is the inducement here? Well, inducement can now be transferred from here to this point. So that's our new inducement, and as you can see, inducement has been taken out. Now, once inducement is taken out with a candle closure, where is your area of interest here? Well, your area of interest is this one here. This becomes your area of interest. So if in future price taps into this area of interest, we want to go short from there. And where is going to be the target? This is going to be your target. So we want to see whether price will go in our favor. Remember, we are riding the trend for the whole week. The whole week. So that's why you see it's going to be a massive trade if it goes in our direction. But let's see what happens next. Okay, so it appears price is dropping now. So we can frame this trade. Our stop loss will just be above. Give a buffer to your stop loss. And then our take profit is this low here. So we are targeting this low. And that's going to be massive. That's going to be about 10 hours. So we continue to play price and see what happens next. Okay, so as you can see, price is dropping in our favor. You will write the whole trend down here for the whole week, and that's going to give you massive profit. So if you make 10 R multiple in a week, I think that is a good bargain. So let's see what happens. Almost getting to our final TP here. But remember, when you are taking your trade, please make sure you begin to lock in some profit. Don't just let your trade to run just like that, because the price can do anything. The market can do anything. It can suddenly turn back and take you out of the market. So you will need to know how to lock in some profits when you are trading. You must understand something about trade management. So we continue. Okay, it has smashed our take profit. As you can see, simple trade setup. That's our take profit, smashed easily. That's about 10 R. It's about 10 R. Okay, that's a good trade for the week. You are done for the week. If you make 10 R, you are done for the week. Simple. Okay, so let's get back to the weekly time frame, and let me show you another example. Here is another example. Look at this candle. Look at the pattern that I showed to you. Here is the pattern. It took out these candles. Can you see that? It took it out. That's the first step. The second step is, what day is this candle printed? I said it should be either on Monday or Tuesday. And this is Monday, 7th October. This is Monday. And you will need to go to the lower time frame. But before you do that, where do you want to take your TP? If you have confirmation on the lower time frame to go long, here. And by the way, why do we want to go long? Well, it is because the trend, as you can see, is clearly bullish. All right, we're having higher high, higher lows, and all that. So we know that with this pattern, okay, from Tuesday, price is likely to expand upward in line with the prevailing uptrend. So that's why we want to go long from here. So we now can go to the 15M and see what is happening on the 15M. So this is the 15M. Now remember, this is our TP. If we find any trade setup, that will be our TP. So let's see what happens. Remember, we want to go long, and so we have this high. For this high to be confirmed, it needs inducement. Here is your inducement. So if it takes out that inducement, then we'll look for our areas of interest. Now, so let's continue to advance price. Okay, so it has taken out that inducement. Where do you have areas of interest here? Now, first of all, where is your trading range? Well, here is your trading range. This is your range low. This is your range low. Why is that your range low? Well, if you don't know how we come about our range low and our range high, you need to go back to our playlist. Why it is a range low is that because this high is valid when it took out this inducement here, as you can see, to confirm this high. And this higher low cannot be confirmed just yet until price travels back up to take out this major structure high. And as you can see, it happened there. Initially, it took it out with a candle wick, but eventually it closed above. Okay, so that is how you analyze the market. Now, this is our higher low, and where is our higher high? Here is our range high. So this is our range low, range high, and this is our inducement taken. So after inducement, you have your areas of interest. Now, the first area of interest, as you can see, is already mitigated. You need to focus on order flow first of all. Now, this one is also mitigated by this. So all the order flows have been mitigated. So we now have to look for resort to using OB. Now, but your OB must have a fair value gap, and it must take out the low of the previous candle. Okay, and as you can see, this happens to be, where is the extreme area of, the extreme OB here? Well, the extreme OB is supposed to be this one, but it's already mitigated. Okay, so we can use that. It's already mitigated. And now, where is the next one we can use? We can actually make use of this one here. Okay, as you can see, that one is not mitigated. But if you are taking your trade from here, you need to consider that this is supposed to be your OB that has been mitigated. So bring your stop loss below this low. Okay, when you are framing your trade, it should be below this low. So meaning that this your OB, this your stop loss should be below this low here. Okay, very important. So that's where we want to take our trade from. So let's see if price will come to that. That's our area of interest. Okay, price has tapped into it and is now going higher. So we can actually frame our trade from here to go long. And your stop loss just below. We have already given buffer to our stop loss, and your TP is up here. Let's see where the TP is. TP is up here. Okay, that's the wick, and this is where we enter the trade. So if this trade goes our way, we are going to have over 6 hours, 6.71 hours. So let's continue to advance price and see how it goes. I hope we are still in the trade. Let's check first of all, are we still in the trade? Yeah, we are still in the trade, guys. So we can continue. So for the whole week, you can hold your position but trail your stops. Don't leave your trade to run like that, because market can do anything. It can suddenly turn back and take you out. So always make sure you lock in some profit. Boom. As you can see, it has smashed our take profit clearly. Can you see that? So this is how to use the weekly time frame to really take high probability trade setups on the 15M. Okay? Once you identify the high or low of the week, then you can trade the expansion. It is trading the expansion that can make money for you in the market. So this is where we draw the curtain. If you are new to our channel, please don't forget to subscribe and turn on the notification so that anytime we upload a new video like this, you'll be notified. And if you haven't joined our free Telegram channel, please do so just immediately. And we have an opportunity for you to learn how to become a professional trader and a consistently profitable one for that matter in 2025. We are giving out huge discounts for anyone who is interested in joining the year-end masterclass. We've given huge discount, so you can take advantage of it and become part of our VIP community, so that by the time you stepped into 2025, you now know what to do with the market. All right, guys, this is where we draw the curtain. Thanks for listening, and I see you in our next video.